Today, we're talking about DeFi, yield generation, staking, lending, borrowing, all that good stuff. Why? Because DeFi, decentralized finance, has been trending in our community for the past few months, ever since F assets went live. FXRP went live on the Flare mainnet. It has been trending. People have been anxious. People have been feeling like I need to get involved in this. I need to understand it immediately. I can't waste any time. So today we're going to be talking about DeFi. And y'all know I like to preach the wisdom side of things in addition to the revelation, and I talk about how people will only seek revelation and not so much the wisdom. But the wisdom is just as necessary. It's the know-how. It's how to apply the revelation, how to navigate these things, the understanding, the knowledge, right? It's no coincidence that the richest man ever was also the wisest man ever. The two things go hand in hand. So this stream today will help you with that wisdom and that understanding when it comes to DeFi. All right. So of course, Jim from Caleb and Brown will be joining me. But before I bring him on, I just want to quickly talk about Caleb and Brown myself. For those who are new, we do have new subscribers to the channel. But for those who have heard about Caleb and Brown, you may hear something new that I share right now that you haven't heard before. So the way my partnership with Caleb and Brown even came about was before I even made my first wealth transfer video, 2022. God highlighted Caleb and Brown to me. Okay. So that's how long it's been on my radar. Then 2024, I reached out to them about a partnership opportunity. And by the way, that's not the norm. Usually companies reach out to the creators, quote unquote, for partnership opportunities. Like my inbox regularly has invitations from companies trying to form a partnership with me. But there's a reason you really only hear about Caleb and Brown from me. That's because I genuinely believe in them. And, I have a Caleb and Brown account. I utilize them. In fact, they required that I have an account before we even had a partnership. Okay. A lot of my SHIB limit orders are on Caleb Brown. I use them. Right. And there's really no reason, honestly, genuinely speaking, no reason not to have an account. For one, it's free. Okay. It's free. But the reason Caleb and Brown has been highlighted is because they are a tool for us to utilize in this whole wealth transfer thing that we talk about. And these are my personal reasons. These aren't the only benefits, but my personal reasons for using Caleb and Brown. Number one, the customer support, customer service. You will not find the same customer support on a centralized exchange. I promise you. You will not be able to send an email and get a response. On average, for me, I get a response like within 5 minutes. But even getting a response same day from a human being is unheard of on a centralized exchange. Y'all probably heard me talk about my little incident with a particular exchange I won't name because I don't want to get Caleb and Brown tied up in my own stuff. But a particular exchange froze my account out of nowhere with no reason, no explanation. Still to this day, haven't received an explanation. And it took 2 weeks for me to get a response. And that's only because I blasted them on social media. Okay. It shouldn't require that. You won't have that issue with Caleb and Brown. Number two, they specialize in transacting large amounts of money. If you're in this wealth transfer, you expect to be transacting with large amounts of money. There are no withdrawal limits. Every exchange has withdrawal limits. None on Caleb and Brown. Okay. So I don't want to ramble too much. I'm gonna go ahead and bring Jim on stage. Let's see. All right, Jim, welcome. Thank you for being here once again.
Thanks for having me, Marcus.
This is probably the fourth. I think this is the fourth video now, fourth collaborative video I've done with Caleb and Brown. Real quick, for people who are new, can you just introduce yourself very briefly, your role at the company, and then just what Caleb and Brown is and how they differ, how a brokerage, Caleb and Brown crypto brokerage, differs from a crypto exchange?
Yeah, thanks, Marcus, and hello to everyone. So my name's Jim Bazzani. I've been a crypto investor since 2017, but I've just been super passionate about the space for a really long period of time. My role is I look after all the key communities and partnerships that we work with at Caleb and Brown. So as Marcus said at the start, The Walk This Way community is one of our top communities that we love to service and work with. So I make sure that everything works really well between the community members like yourselves and our brokers. So I work very closely within the brokerage team. Often at times people think I'm a broker myself. So I don't directly work one-on-one with clients, but I work really closely with trusted figures like Marcus, and to make sure that their community is well serviced and well looked after. So I act as almost that intermediary between the brokers and yourselves as our clients. As Marcus said, look, one of the key differences, or the way that we operate that is very unique and different to every other provider in this space, is that we're about building long-term sustainable relationships with our clients, and we do so through a personalized white glove service. So the key difference between an exchange, as Marcus mentioned, I've used exchanges and that's where I got started. But if I ever had a customer support issue, or I wanted a bit of guidance around, hey, what am I currently investing in, or what's actually currently happening in the market, you're unfortunately not going to get that on an exchange. And it's completely different with us at Calvin Brown. So not only do we help you buy, sell, and swap in and out of cryptocurrencies, we actually help educate you about you and your portfolio and what we're currently seeing in the market. So a lot of the discussion we'll have today around DeFi protocols and what we're seeing in the markets, a lot of those discussions are things that you can have with your brokers day to day. So you'll have direct access to your own dedicated broker, which means you'll have a phone number to reach out to, an email. And a lot of the time, our clients will call their brokers, either daily, weekly, monthly, whatever works best for you, to help ensure that they're as informed as possible around what's happening in this space. Because, hey, look, it's a 24/7 service. It's a 24/7 market. So there's always things happening. There's always things happening within the macro world that impacts crypto. So it's valuable to be as informed as possible. So that's really what we emphasize and what we work through. It's a brokerage, as Marcus said, not an exchange. So think of it like your own dedicated service that is specific to you.
Awesome. Thank you. So I see a lot of, a few questions already in the live chat. We will definitely get to the questions. So keep them coming. You don't have to hold the questions. I'll go back and bring them up when necessary. But this stream is just going to be a conversation between, Jim and I concerning DeFi mainly. Don't forget to like the video if you get something from this, as it obviously helps spread it to more people who may benefit from seeing it as well. So before we get into DeFi specifically, Jim, can you just give us like a market update? Like, where's the market at right now? What's going on? What is Caleb and Brown seeing through their research and their analysis?
Yeah, we're at quite an interesting point in the market right now. I think there's a lot of caution and a little fear in the market, and that's really been grown over the last sort of month through geopolitical tensions. So we're seeing some of the concern around the Greenland instance, where people are not sure what's happening there. And there's a lot of uncertainty that, unfortunately, crypto as a risk-on asset is bearing the brunt of that. And so right now we're seeing a quite an interesting shift in where investor funds and assets are flowing through and into. So we've seen gold and silver, especially with gold being seen as some sort of a safe haven asset, especially in times of inflation or uncertainty. They're rising to all-time highs. So gold's at nearly $5,200 now. And so we've seen a lot of the inflows that are recently really propped up the crypto market. They've almost now outflowed into more safe haven assets like gold and silver. But in saying that, we've still seen that as of right now, Bitcoin's hovering around the 90K mark. Ethereum's back at around $3,000. So we're certainly not in a bear market by any means, but I think there is a lot of uncertainty, and we're seeing a lot of capital flow from crypto into other assets like equities, like gold and silver. So right now we're in almost a little bit of a wait and see. The Clarity Act was an interesting development that we thought would get passed that is now going back and forth at the Senate. But it gives a broader overview of, while the market's maybe not at the level, the price levels that we thought it would be at this stage of the market, we're still seeing so many positive developments at a federal and government level. And honestly, if you look back even from a year now, we've got the Genius Act passed. We're starting to see more and more states hold crypto on their balance sheets. So we're starting to see a lot of more and more positive developments in the market. It just hasn't necessarily reflected into the price at this stage. So I still think we've got a pretty exciting and bullish year ahead for a lot of our clients. And what we're seeing within our business is that we're seeing a mix of the two, where a lot of clients that hold a lot of crypto and probably feel like they're over levered are just holding that crypto for now. We're seeing a lot of clients buy in and actually add to their positions because they see this as a great entry point. So again, it's very much dependent on what you're holding and where you're at in the market. Certainly if you were holding altcoins and even some meme coins that haven't performed as well, and usually they're the first to get sold off, but that doesn't necessarily mean that we won't see a rally and more liquidity come into the market sort of into the back end of this year. So we're in a bit of a wait and see holding pattern. And that's reflective of what we're seeing in the overall broader macro market, but also some of the geopolitical tensions we're seeing in the market as well.
Great. So, a lot of the early questions right now, this is a popular question that we get every live stream, and it just concerns, generally speaking, it concerns where Caleb and Brown offers their service, right? So somebody asked about Canada, somebody asked about the UK, which of course I know off the top of my head. Those are two places where you guys are not operating right now. You did operate in Canada, but last year that had to change. So can you just speak on that very quickly? You guys are based in Australia. You have office in the US now. So I'll let you speak on that.
Yeah, so I do have some positive developments, at least for the UK question. But as you said, so I'll just provide a brief overview of where we operate, essentially our residence as a business. So look, back in the day and even today, our key CEO and founders of the business are from Australia. And so the business was founded in Australia and really grew to what it is today from our office here in Melbourne. However, as you said, we have an office presence within the US. More and more of our resources and our employees live in the US and are US citizens. So we have an office here in Melbourne, Australia. That's where a lot of our brokerage team operates out of. But slowly but surely, a lot of them are now moving to our office within Florida. And we have a US entity as well. So if you're a US client on this call, and I know this is sometimes a bit of a concern because our headquarters is in Australia, you actually fall under our US entity. So if an Australian client signs up, they'll fall under our Australian entity. But if you're a US client, you actually fall under that US entity, which means you have all the rights and obligations under that US entity. Essentially, the US entity is one that holds all of our licenses that is held on a state-by-state basis. And you would operate under that US company. So that's how that works, because I know that's often a question for our US residents. In terms of the other jurisdictions that you mentioned, Canada, yes, unfortunately, we're not currently onboarding clients from Canada. The main reason isn't because we don't love our Canadian clients. In fact, we had a really great relationship with a lot of them. The main reason is that just we found that there was a lot of difficulties with the banking rails there. So, it's something that we experience sometimes within the Australian market, but we just found that we had a lot of Canadian clients that had issues depositing their money into Caleb & Brown, or even more worryingly, when we went to withdraw their assets back to their Canadian bank accounts, often at times it led to delays, it led to issues because we found just an almost anti-crypto stance within the country. So it just led to a really bad user experience for those clients. And it honestly led to a lot of time spent on our end trying to sort those issues out. So yes, unfortunately, we've exited that market. But again, it's not something that will be final. We hope that we can operate within the Canadian market again. One of the benefits of our service is that it is so customer facing, but then ultimately that can lead to a lot of delays and issues if we're dealing with issues with banks. So again, it's not a final decision, but as of right now, we aren't onboarding new Canadian clients. The UK, a similar type of story. We used to actually have an office within London, but again, they enforced new regulations that made it really difficult to promote crypto within the UK market. However, I have a really positive development on that I can reveal at this stage. We are hoping to operate again within the very short term within the UK market and actually start to onboard UK clients again. So we're hoping that we'll have something to announce that will be more concrete within the next 2-3 weeks. We've got a few things on our end that we need to satisfy in terms of updating our website. I think we'll have a unique UK domain just for UK clients. That's what's legally required, among a whole range of other things that we're working through as a business right now. So if you're a UK client, please hold tight. Hopefully I'll have a positive development within the next couple of weeks, and you'll be able to sign up and start working with us from the UK, which is really exciting. But I'll have further updates with that in the future.
That is awesome. That is great news. So yeah, I'm excited for those of you in the UK. I'm not surprised though. You know, our friend Sharon at Now Daily Bread, when she had me on her channel last, she really felt that she needed to ask me to talk about Caleb and Brown. Even though she's based in the UK, she just really felt, hey Marcus, I want you to talk about them. And so yeah, I look forward to that offering coming up. Okay, so now getting into DeFi. So when I last logged on to Caleb and Brown, I was met with a pop-up, and it said, hey, Marcus, we're looking at offering DeFi opportunities to our clients. Do you mind taking a survey to essentially let us know how you use DeFi and what you're looking for? So I took the survey, and it's asking me all these questions, but that let me know, like, oh, wow, Caleb and Brown is looking into offering DeFi opportunities. So can you speak on that? Whatever you're at liberty to share at this point in the process, Jim.
Yeah, so firstly, for those that maybe don't know too much about what DeFi is, essentially stands for decentralized finance. And it can really mean anything from staking your assets, so staking your crypto to earn a yield, to borrowing, lending, even to some kind of more complex strategies like derivatives trading and other kinds of forms of trading. So as a business, since we started and even today, we've been purely a spot crypto platform. And what I mean by that is you can buy assets through us, but you can't do things like leverage trading. There aren't ability, as I said, to earn yield or stake your assets for, what we'd call, interest in the traditional finance world. So as a business, that's really been the way that we've grown, is that we've allowed clients just to buy crypto assets with us, to safely custody them with us, because for a range of reasons, it's the safest way to invest in crypto. A lot of the time, we usually tell clients not to leverage trade because there's a lot of risk in that. But also from a licensing perspective, it's a lot more difficult to offer those kinds of products because there's a whole range of custody perspective things, liquidity perspective things that you need to get right as a business. So it's been quite complex as well. Now, as Marcus mentioned, we are certainly looking into now providing alternative solutions and products that in the past maybe have been too difficult for us to provide. So at this stage, we are looking into especially things like staking for certain assets, the ability to be able to borrow against your crypto. So you're starting to see more and more people borrow against their Bitcoin, or even lend their Bitcoin out and earn a yield through that. So we are actually looking into providing those products for clients. We're very much in the discovery phase at this stage. So what that essentially means is getting validation on the demand from our clients, starting to build out what it would look like to offer it. Because for us, look, we're going to do our due diligence. We might be not the quickest to market, but I guarantee you once we offer a service and a solution, it'll be one of the safest. And that's something that, again, we'll touch on a little bit in terms of DeFi and all the benefits of it. But there are certainly risks, and nothing's ever a free lunch when it comes to decentralized finance as well. So at this stage, we're doing our due diligence. We're looking into how we build these products, but how we do so in a way that doesn't compromise, the Fireblocks institutional grade custody solution that we offer, or providing enough liquidity or yield generation that's actually enticing for clients as well. So we are actively looking into it. Some offerings are further along the pipeline than others. But look, as a business and through our integration with SwiftX now, we want to continue to develop. We want to continue to innovate because we know that our clients are demanding that of us and expect that of us. So we are actively looking in this space, but I don't have any concrete news to announce yet. But certainly we are actively looking and looking to develop something hopefully sooner rather than later.
Yeah, that's awesome. Like I said, I was surprised when I logged on and I saw that. So if and when that starts to be offered, that'll be great. So speaking of DeFi, just basics and general overview. So when people hear the word DeFi, what are they actually talking about in practical terms? And maybe also from a beginner's perspective, what are some misconceptions maybe that people may have when it comes to DeFi?
Yeah, so the best way to think about DeFi is that it's like earning interest on a bank. But if you think about how you earn interest through that bank is the third party middleman. You're essentially trusting them with your funds. Whereas DeFi is very much cutting out that middleman. And a lot of the time, if you're moving your funds, you're doing so through or into a smart contract. So the best example to give is that some protocols like Ethereum and Solana, they're proof of stake blockchains. And so essentially, people provide their assets onto the blockchain to help secure it, to help ensure that it continues to operate. And in doing so, so if I provide Ethereum into the Ethereum chain and I stake that, I actually earn a rate of return back. Think of it very similar to how if I hold my money in a bank, I get interest from that. And that bank is saying, hey, thank you for providing me with your funds. Here's some interest for that. And then a bank is usually using those funds to then loan out those assets to other people through mortgages and what have you. It's kind of similar to DeFi, except I'm providing my assets into a smart contract. For some blockchains, like I said, Solana and Ethereum are two of the bigger ones. That helps validate the blockchain. That helps ensure that it continues to function. And in doing so, they'll provide a yield back to me. That's one form of DeFi. So that's what we'd call sort of staking or yield generation. But there are other mechanisms, as we mentioned. I may borrow assets. So I may be borrowing assets from a liquidity pool, and then I actually have to pay a rate back. In turn, I may be lending to one of these liquidity pools, and through providing that lending, I earn a rate back. So the best way to think about it is it's using your underlying capital to earn some sort of interest or rate within the market. Now, sometimes that's done through securing the blockchain, as I mentioned. Sometimes that's through things like validating through liquidity pools and providing funds to the overall market. So there's a range of different ways that you can use your assets within what we call the DeFi ecosystem. But it's important to be across, okay, what am I actually providing to the ecosystem? What's the rate of return that I get back? But I guess the misconception, as I mentioned before, is that some people seem to think that it's completely risk-free. And unfortunately, that's not the case. There's always risk associated with using these protocols or smart contracts. The risk may be really small and minor, but usually the risk may be that, yes, the percentage chance of it happening is very small. But if it does happen, say, a smart contract gets compromised, the actual risk of losing that entire underlying capital could be very real and very, and it's happened before. So I would say that's the main misconception. Often, what we recommend for our clients, obviously, we don't offer that kind of yield generation at this stage. But if we have clients that want to interact with these protocols, is at least do so with a really small amount of your capital to begin with, until you are very strong in your understanding of how they work and how the yield is generated. And then over time, if you want to add more capital to it, you can. But DeFi is that overarching umbrella, but there are a whole range of protocols and businesses that do a whole range of different things and offer different yields. So it's something to educate yourself on. And certainly I can help with this discussion today. But it's very dependent on the kind of blockchain you decide to use your DeFi mechanisms through, or the types of protocols as well.
Awesome, great. So real quick before we continue, so there were two more countries or territories that were asked about. Just real quick, if you can give an answer on these, you don't have to go into an in-depth explanation. But somebody asked about Ireland, and then another person said that they contacted Caleb and Brown, but they don't allow accounts from Puerto Rico, even though Puerto Rico is a U.S. territory.
Yeah, so I'll probably just say that the countries that we are operating in at this stage. So it is the US. So if you're anywhere within the US, except for New York at this stage, which we hope will change in the future, you can use Caleb and Brown. And then if you're from Australia or I'm from New Zealand. So they're really the only 3 jurisdictions that we're accepting clients from at this stage. Now, Ireland is a tricky one. Europe in general is quite tricky due to the sort of new MiCA licensing regime and everything that's changed there quite quickly. At this stage, if you are from Ireland, unfortunately, we can't onboard you. But again, that's something that we're actively looking at. Europe in general is one that we're looking at quite closely to see that if there's a way in which we can operate within that market again. In Puerto Rico, I'm not 100% certain on that one. From my understanding, Puerto Rico isn't a US state, although I could be very wrong there. So I'm not from the US. So maybe for Puerto Rico, I can get back to you on that. I know that we used to offer our services to Puerto Ricans in the past. But from my understanding, it's just all the US states minus New York that we're accepting clients in. I'm not sure, Marcus, if you know much about Puerto Rico, you might know more than me about that.
Yeah, as they stated, Puerto Rico is a U.S. territory. It's not technically a U.S. state, part of the union, so to speak. It is a territory, though. And, Puerto Rico, to my knowledge, has some pretty lenient or crypto-friendly laws. A lot of people want to move to Puerto Rico because of the taxes on crypto and things of that nature. So yeah, by all means, if you can just get back to me in an email or something, and I'll share it with the community, because it would make sense to me that you guys would offer services to Puerto Rico. So maybe just a miscommunication between that subscriber and who they were speaking with, but we'll see. So back to DeFi. So the next question is, how would you explain the difference between sustainable yield and more speculative yield? So, like, for example, speaking of Flare Network, they've been doing these Flare drops for just about 3 years now. And the next Flare drop is actually the last one. And so that's more speculative yield because it's tied to incentives, and it's for a certain period of time, and usually the APY or the return you're getting is higher than normal, where the more sustainable yield is that it's probably lower, but it's more based on transaction fees being paid out or providing liquidity and just network usage. So are you able to speak on, the difference between those two things, or whatever may come to mind when I bring that up?
Yeah, so I think the first thing, as I mentioned before, is that there are some assets that are inherently on proof of stake networks. So I keep mentioning Solana and Ethereum, but they're, especially Ethereum, it's the largest sort of DeFi blockchain in the space, with billions of assets locked in these DeFi protocols. And by the way in which the blockchain works there, where they have validators and people provide their funds to actually validate the blockchain, that is a far more sustainable and safer way to earn yield and to use your products and services to generate that yield. So as an example, I use Lido, which is one of the largest DeFi protocols built on the Ethereum blockchain. So I stake my Ethereum into that mechanism, and I earn a yield back for essentially validating the network and securing the network. So that's more of a safer use case. Now, that certainly still has risk. There is contract risk with that. There's also liquidity risk, although the liquidity risk is quite minor. So that's something that's a bit more sustainable. Now, when we talk about certain assets, and XRP is the one that comes up often, and the difficulty with XRP is that that's not natively staked. So the way in which the blockchain works on XRP is that you can't stake your XRP onto the chain to secure it like you can with Ethereum. So if you are to earn a yield, and yield's probably not even the right term for XRP because it's not a yield. It's essentially a rate of return that you're earning. Companies need to get more flexible and more innovative with how they offer that yield or rate of return, sorry. So in that instance, Flare, as you mentioned, is one that is quite a new mechanism to earn that rate of return, but it's quite an interesting way that you do that. So how you essentially use the Flare network to earn a rate of return is that you have your XRP, which sits on the XRP ledger. You then deposit that into the Flare network. You then mint a synthetic XRP called FXRP, or almost like flared XRP. And then you can actually then use that Flare XRP and stake that into the protocol to earn a rate of return back. So as you can see, you're actually not holding the underlying asset at that stage. You're actually depositing your XRP to earn FXRP back. Again, there are certain risks associated with that, but your rate of return isn't coming from necessarily staking. It's done through things like, as you mentioned, they may be doing market neutral trades. They may be doing basis trades within the market to get you that rate of return. Now, that rate of return may be a little less than what you get on, say, Lido. From my memory, Lido is at about 3%, 3.5%. That fluctuates just depending on the Ethereum market and what's actually occurring on chain. But so for Flare Network, it is a new protocol. I would say they're relatively innovative and sort of first to market when it comes to using an asset like XRP that you can't natively stake, which has a lot of benefits, right? Their APY is probably stronger now than what it will be when it gets more product market fit. They actually have incentives as well to potentially earn more Flare. But in terms of the rate of return you're getting back, you're actually earning Flare tokens back. So it's not like you're earning XRP back, you're earning Flare tokens back. And then naturally you can sell out of those tokens, but it depends on obviously how the price of Flare is looking today, and then how it will perform over time. So I think certainly not bad mouthing Flare. They're doing quite an innovative thing within the DeFi market, which is really exciting. But ultimately, there's also quite a nascent first mover advantage of that. But there can be certain risks associated with that as well. So as I mentioned before, it certainly doesn't hurt to experiment and explore these new protocols. But I would do so not by deploying all of your capital. I would put a small percentage in first, see that rate of return come through, see how it all works, especially because there's levels of collateralization that you need to apply. And then it depends on the price movements of XRP, which has been quite volatile over the last 6 months. So I'd put in a little amount to begin with, understand how the protocol works, see how it all works. And then over time, if you want to add more and you feel comfortable adding more, put more in. The biggest risk with this is that people go all in and put all of their assets in. So they put all of their XRP into the protocol, and then maybe something happens or they suffer from, say, impermanent loss. So there are risks associated with it. But certainly Flare is an interesting protocol that I'd recommend if you're interested in DeFi and you're holding XRP to have a look into. But very much they're the first protocol that's offering this. They certainly won't be the last. So we are in an early phase of DeFi within the XRP ledger, and Flare is certainly one of the first movers in that space.
Thank you. So real quick, can you maybe in layman's terms explain what it means to secure a network? Like, how does me staking my crypto, let's say staking my Ethereum on the Ethereum network, how does that quote unquote secure that network?
Yeah, so you're providing funds onto the blockchain that allows it to operate, and it does so through validators. So used to be back in the day, you'd have to provide 32 ETH to the Ethereum blockchain to actually become what we call a validator, which helps validate the blockchain in terms of all the transactions that come through on Ethereum. They need to be validated, so they need to be stress tested. Now, Ethereum is quite secure in the sense that there are thousands of validators, but essentially the rewards are created through the Ethereum that is put through into that chain to provide the incentive for them to continue to validate all the transactions that occur every sort of minute. Now, that has changed over time through the innovations that have been created on the Ethereum blockchain. So someone like myself, I can put just say 1 Ethereum in or even half Ethereum into these pools. These pools are then used to help validate all those transactions that come through to ensure that the blockchain continues to operate as usual. but also that the blockchain transactions are correct and haven't been malfunctioned or essentially played with. And in doing so, I get a rate of return back. So it is a little nuanced in how it works, but certainly that's more from a proof of stake blockchain. Now, if I'm providing assets on, say, Uniswap's probably one of the best DeFi protocols. They have liquidity pools that help people trade in and out of assets through it. But for me, I can lend my assets into that liquidity pool. And so doing so, it allows other people to trade within it. And I earn a small rate of return each time those people trade. So there's one element of it that's securing the blockchain, and I earn a yield through that. But there's other ways that I can earn yield through lending through liquidity pools and what have you. So I hope that makes sense. Essentially, it's important to understand if I am earning the rate of return, how am I actually earning that rate of return? Am I lending my assets that is then going to be used in a liquidity pool? Or am I lending them onto a protocol that's allowing that protocol or that blockchain to function? Ultimately, it doesn't matter too much at the end of the day, as long as you understand where that rate of return is coming from and also the risks associated with that.
So speaking of specifically how the yield may be generated, um, in a market like this, what the market that we're currently seeing, things aren't necessarily running. Things have been kind of stagnant for a few months now, a couple months now. Um, what do you think matters more, the yield that you can get, or specifically how the yield is being generated? And then maybe you can connect that to um, how does participating in DeFi right now compared to participating in like a strong bull market?
Yeah, I think certainly how the yield is generated is the most important thing that an investor can be aware of, because at this stage, I've spoken about the protocols and the blockchains that are providing a legitimate yield. But as you can imagine, over the years, we've seen many companies such as Celsius, such as BlockFi, offer really, really high rates of return. And often that's a really big telltale sign. If someone's going to offer you anywhere from 10 to 20%, which is what was being offered back in the day, your alarm bells should be going off in your head almost immediately, because what that usually tells you is that they're not actually earning a yield in a legitimate way. What they're doing is almost like a Ponzi scheme. And I was someone that unfortunately had money in Celsius back in the day, which essentially meant that I was providing money to them. And then so was Marcus, and then so was thousands of other people. And then how they were earning that rate of return is that they were actually providing that 20% to me by shaving money off someone else's deposit to then provide me with that rate of return, which works if they're continually adding more and more people to the pool. But then as soon as word gets out, or as soon as their growth of users dwindles, all of a sudden that's where it comes crashing down. And we've seen Ponzi scheme DeFi protocols happen over the journey for quite a long period of time. So the number one important thing is to figure out, where is this yield actually coming from? Is this a legitimate protocol that has significant liquidity, that has a track record of providing that yield? So, the Aves of the world, the Lido that I mentioned before, these are legitimate DeFi businesses and protocols that have been around since the dawn of time. Well, not the dawn of time, but the dawn of time for DeFi, which was really 2018, 2019. Are they a legitimate business, or are they offering me yields that seem almost too good to be true? Because if it's anywhere from 10% up, it's a lot of the time too good to be true. If it's a rate that you can earn, in the S&P 500 or even just risk-free, and it's far higher than that, often that will tell you that there's something quite nefarious going on in terms of how they're offering that yield. So I would say both where the rate of return is coming from, but also does the rate of return seem reasonable, especially given the assets that you're staking. So I hope that makes sense in terms of what to look out for. And then when it comes to time to determine, how much of my underlying asset am I going to provide in the market? Certainly, if we're in a bull market, usually the assets themselves perform really well. So, as an example, we've seen Bitcoin be the best performing assets since its inception. And certainly since 2017, 2018, it's been the best asset in general. But we've seen other assets such as XRP, such as Ethereum, perform really well in a bull market. And a lot of the time for investors, that's enough for them. They don't want to expose their assets to the risk of using a protocol or using one of these DeFi applications. They're more than happy just holding the underlying asset because the rate of return on that itself has been quite high. It's usually when we're not in bullish market conditions like now, where people start to think about, well, look, the asset itself isn't performing too well. Maybe I'll try and earn a yield on the side. And certainly that's something that I've done in the past and do to this day, but I do so with a very small percentage of my assets. Now, I can't tell you what the best percentage is. Obviously, your risk profile is different to mine versus someone else. But certainly, I think it's important to have safeguards in place and to understand, okay, where's this rate of return coming from? Maybe I'll only put 10% of my overall crypto net worth into this, maybe even less. But we have people out there that will put their entire amount in, and that's where I think the risk is too high, because you have things like smart contract risk, you have counterparty risk, there's also liquidity risk and impermanent loss risk as well. So there are a whole range of things that you need to take into consideration. But I think it's worth being extra cautious when we're not in bullish market conditions like I would say we are right now, and in a bit more of a cautious approach. The other one element that I would mention, Marcus, that's important is, okay, for protocol like Lido, which as I've mentioned, I use, I can withdraw my assets almost immediately and get those assets back, which gives me peace of mind, especially if the market moves and I want access to those underlying assets back. I can get them immediately. There are a lot of protocols and DeFi applications that will have lockup periods. And so that's where it's even more risky, because if something happens and there's a bank run and you can't access those assets back, that's risk associated with that as well. So there's a whole range of things that I would take into consideration when making a decision on when to use these DeFi applications. Now, hopefully in the future, Caleb and Brown will offer them, and we'll be able to provide a whole range of education, and it'll be as safe as possible. We're not going to offer something that won't be, but at this stage, we can't offer that. So all that we can do is educate you as much as possible if you're going to go to market to try and earn that rate of return.
Sorry, I was on mute there. Okay, thank you.
Okay.
All right, so let's see. What skills or understanding do you think are most important to develop before engaging deeply with DeFi? I know you talked about, starting out with a small amount first, but what do you think is really important for people to know, and what level of understanding they need to have? Because I do know DeFi is definitely more technologically, it's more technical heavy. There's no middleman, which in a lot of ways is good, but in other ways, like if you do a transaction incorrectly or send your crypto somewhere you're not supposed to, there's no customer support to contact to try to reverse that. So yeah, what skills or understanding do you think is important before people engage deeply?
Yeah, it's a great question. I think education is king, and hopefully part of this video will be informing you on the things to look out for, especially some of the risks that I've mentioned already. But I think, look, unfortunately, crypto is still very much in the development phase, and one of the biggest knocks on this space is that the UX, the UI is really difficult to understand. Now, some protocols and apps are better than others. The two that I've mentioned probably so far to date, and that's because I've used them personally. I know that a lot of our brokers use them themselves, is Aave and Lido. Actually getting a good understanding of the interface is probably one of the biggest skills that as a new person into DeFi that you can learn. And you can do that without even investing any money. So you can connect up your wallet to one of these protocols. A lot of the time when you go on them, they'll have the option of borrowing, lending, and even staking. And so you'll be able to select which one, which functionality you want to become involved with. And then on the platform, you actually see, okay, the amount that I deposit, how much did I deposit, what's the rate of return I get back. So you can actually learn quite a lot from just logging in, hooking up your wallet to it, and actually going through the steps on the actual websites themselves. The biggest things to be conscious of is how much am I going to borrow, or how much am I going to lend? So essentially, how much am I depositing into the protocol? If you're lending, I think that's I think that has a bit more risk associated with that, because you're actually lending money through the protocol. So the important thing there will be, okay, what are the terms of that loan? So how much time do I have until I need to pay it back? What's the interest, or the essentially the rate that I need to pay back on it? And the collateralization rate of it as well. So I would recommend for anyone that's a beginner to crypto, that you don't go through the lending route. Certainly, if you're looking to borrow, the other way around. If you're looking to lend your assets out, and essentially deposit into the protocol, I think that's a lot less risk-free than, say, borrowing. If you're going to borrow assets, that's where can be a lot of risk associated with that, because you're actually paying an interest rate back. So the biggest skills and lessons that I would be advising anyone on this call, if you're looking to get into DeFi, is just connect your wallet up and actually have a play around on the platform without actually depositing any money into it. But something that we stress and recommend for all of our clients is, look, while we're not offering the services ourselves, we can certainly provide educational tools and materials to help you and get you on your way when it comes to getting started within these DeFi protocols and applications. So if you're ever unsure, I would recommend reaching out to a Caleb Brown broker, because we can help inform you on the best protocols and places to get started. But also, we have a lot of clients that think they're on a legitimate DeFi application. In fact, it's actually probably a scam or might be a Ponzi. So if you're ever unsure, please reach out to us, because we're here to help. But I would recommend going by some of the more market-leading protocols to begin with, like some of the ones that I've mentioned, and getting started on those ones, as opposed to maybe going down a more unique route, or you've heard someone go on one protocol and you try that one instead. I would start with a market leader. I would connect up your wallet and have a play around on the portal. Usually a lot of them have quite clear instructions on how to get started.
Great. Thank you. So to close, normally we'll field questions from the live chat. I do see a question or two that I'll ask. So I'll give you guys a moment to enter any final questions you may have, whether it's FXRP, whether it's Caleb and Brown specific. But before I get into the final Q&A, I do want to bring something up, Jim. Kind of a curveball, but I know you can handle it. Let's see.
Yeah, I didn't. That.
No, so I got an email from someone who's a channel member of mine, and I was just going to talk about this email myself on my members live stream tomorrow. But when I was reading it again this morning, I was like, you know what? I think that'd be a good question to ask Jim. Not only just from a technically sound perspective, but coming from a brokerage, and to ask how Caleb and Brown kind of handles this sort of thing. So I'll read it. He says, I used to assume that as long as price hit a preset sell limit, the order would execute and fill regardless of size, even into the millions. However, I came across a video discussing an early SHIB, or Shiba Inu investor, who reportedly turned $1,700 into $60 million in 2021, but was unable to fully exit due to liquidity constraints at the time. He said at a certain point he was only able to safely withdraw around $2,000 per week. That sent me down a rabbit hole researching order book depth, available buy liquidity during fast price movement, and how very large single sell limit orders can fail to fully fill even when price technically reaches the target. It seems execution becomes a real variable once order sizes exceed available demand on exchanges. then he goes on to say that because of these things, he changes strategy from having 10 large sell orders to 50 to 100 smaller ones for a particular token. So essentially, he's, asking about any idea of structuring exits in a way that improves execution probability during high volatility.
Yeah, so an interesting little anecdote. Certainly, for if you're putting in a limit order, or, at a certain price point, um, it can depend on the amount of liquidity in the market. I can't really speak to exchanges. It sounds like he was doing, or that story came from an exchange. So there's a few things in that. The first is that it sounded like for him it executed at that amount, but then there wasn't enough sufficient liquidity for him to sell into the market. And certainly that can happen. And that's where what we call slippage can occur, where if you've got a really large position in an asset that doesn't have a lot of demand in the market for it, or there's not a lot of liquidity in the market for it, it's really hard to sell out of that really large position without severely tanking the market. And so that can happen at times. Now it depends on the asset, the liquidity, the amount of people in the market that have liquidity pools for it. So I can't speak to that specifically. With Caleb and Brown and how we do things, certainly, as you mentioned, we allow people to put in target orders. Now it depends on the price oracles and where exactly that price hits. As you can remember, back in October last year, we had a mass liquidation event, and we saw a lot of assets, especially things like XRP, drop quite a lot in price. A lot of people had buy orders at a really low price. And so for us, we were able to fill those orders for clients. And so they were able to buy in at a really great price. Now, the other way around that, or the other side of that, is if a price wicks instantly and then comes back down, we try our best to fill all those orders, but it depends on the liquidity in the market for it. Now, certainly, if you're someone that likes to put in a whole range of target orders and price orders, it depends on how much liquidity we can sufficiently execute those orders at and at that price. Now, for most of our clients, if it's a quick wick, that might be different from, say, if it hits a sustained price that they can execute and sell out of that position at a full amount. Now, for most of our clients, they've been able to sell out or buy into at the full price that they've put the order in for. So I can't speak to SHIB specifically. Obviously, that's been quite volatile, but I do know that any price orders that people have put in for SHIB have been executed once that price hits. So it shouldn't matter too much whether you're doing, say, 50 small ones or one large one, because it'll just depend on whatever liquidity is in the market at that time. Now, for some exchanges, they may partially fill your order. So in that example, say you have one really large, big one, they may partially fill, say, 40%, 50% of it. I'm not 100% certain. And now in that example, yes, sure, if you had a bunch of smaller ones, they may fill, but it may fill only to the exact same amount of the liquidity that they can fill that order for. So it's dependent on that. It's dependent on how these exchanges are pulling liquidity. So for us, we'll use institutional grade liquidity. So we have trading partners all around the world and a range of OTC desks that help with that. So certainly that is dependent on the asset, but also the liquidity partners that a lot of these exchanges use. So for us, we have really deep liquidity. So we're very confident that we can always execute those price orders when they hit. I hope that answers the question. I don't know if it did.
Yeah, no. That's a great answer, especially, I did want you to touch on how Caleb and Brown fills limit orders like that. And
Yeah.
I can talk from my perspective during my live stream that I do tomorrow. So yeah, that was a good answer. So with that said, we didn't really get any new questions, but there was one question. We've talked about this before in the past, but of course, over time, new people come to the channel. So this is not connected to DeFi or anything. This is about the great Terra Luna Classic. All right. There, He's asking.
Another protocol that I unfortunately had assets on.
He's asking, do you see Luna Classic being on the Caleb and Brown exchange? Which, I know it once was, but of course, once it all collapsed, it got delisted from multiple exchanges. So I guess maybe a better question would be, what would it take for it to possibly, if it's even possible, to be possibly listed once again or relisted?
Yeah, I can't speak to our legal team and I guess all the parameters and thinking that goes into it. Just for anyone's understanding on this call, the way that we list assets or decide to unlist assets is we go through a whole thorough legal review of the token. We also do a review of the tokenomics of it. So, how much liquidity is in the market for it? Who are the founders? What's its previous history? Is it a privacy coin? So, like legally, we can't list privacy coins like Monero because, as you can imagine, there's a whole range of issues with that. And so, look, for Terra Luna, as I said just before, I was an investor out myself. Lost a little bit of money on it and was fortunately able to withdraw my assets off it before it completely crashed. I would say that the chances that we really relisted again are very slim. And the reason for that is that it literally came through as, an illegal Ponzi scheme. Do Kwon, who was the founder of it, has gone to prison. So for us, there's a whole range of legal ramifications for us listing it. It was essentially seen as a legal protocol, and the token itself was the protocol that underbacked it. So unfortunately, I think it's probably less likely than likely. If you're someone that's holding it, I would be, I would certainly be maybe reconsidering that. I don't know what is happening with Terra Luna these days. I'm not actually quite sure if anything is being built on it again. As I said, it came out that it was almost like a Ponzi scheme of sorts. So I would be quite, I'd be reconsidering that decision potentially. Unfortunately, I don't think it's something we'll be listing anytime soon, just because legally we probably can't.
Thank you. So yeah, so those are the questions. So thank you, Jim, for being here once again, and just having this discussion with us about DeFi and talking about Caleb and Brown. And for those who are watching the live stream, stay. I'm not done yet. We're gonna let Jim go, but I'm gonna close solo. But yeah, thank you, Jim, for being here. We appreciate it as usual. Yeah.
Yeah, thanks, Marcus, for having me on. For anyone on the call that listened in and is still a little confused, or maybe I didn't do a great job explaining things, please feel free to reach out. I'm more than happy to assist anyone that's new in their journey. So my email is jim@calebandbrown.com. So Caleb, A-N-D, brown.com. And please feel free to reach out, even if you have questions on Caleb and Brown. As Marcus said, it's completely free to make an account and speak to a broker. So it's always really valuable, especially in the crypto space, to have options. So you may have an exchange, you may use your own wallet, but certainly feel free to make an account, as it's free to do so. And you can speak to a broker and just see if the service is right for you. It doesn't require you to put any money in upfront. So thank you very much for having me on again, Marcus. Looking forward to potentially doing another one in the future. But please, if none of that made sense, please feel free to reach out. I'd be happy to explain in clearer and in more detail.
Yeah, absolutely. So I'll be in touch. I'll probably shoot you an email once I close here, Jim. I know normally I just end the stream and then we can talk afterwards, but I have a few things I just want to share about, my channel in general. So
no worries. Thanks for having me on, and I'll jump off now.
All right, Jim. Thanks. Talk to you soon.
Thanks.
All right, y'all. So that is Jim from Caleb and Brown. Hopefully you guys learned something. As stated earlier, you can just join through my link down below, affiliate link in the description. Now, obviously, one thing we always have to understand, right? I bring Jim on from Caleb and Brown to speak from a technical perspective, right? We are largely prophetic in this community, but it's important to have the practical side of it. That's the wisdom, right? The practical side of it too. So, right, I never want y'all to feel discouraged if someone coming from a technical or practical perspective may not see something the same way you do, right? Such as Luna Classic, right? You have to understand in the regular world, yeah, Luna Classic was a complete failure. The founder is in prison right now. Like in the regular world, there really isn't much reason to be listing Luna Classic outside of the fact that some people still trade it, you know? And so you have to understand their position and where they're coming from, right? And so just knowing how to separate those two. Okay, this is prophetic. This is what I believe in. You know, the world may say this, but this is what the Lord has shown me, and that's cool, right? So you take what benefits you and what makes sense for you, and you may sometimes dismiss small things here and there, right? But overall, it's always very edifying and beneficial to have Jim on and speak from a more technical perspective, right? And get that wisdom and knowledge and understanding. So for those who are still watching, right, I just want to point out real quick about the channel, right? Because again, we have new subscribers and I've been taking a slightly different approach this new year, right? So y'all have seen a bunch of shorts. I've been posting a lot of shorts, right? Those shorts are mainly coming from live streams that I'm doing in the member section. So as a thank you to channel members for supporting, I said, hey, let me do more regular content in the member section. So I've been doing a live stream every week. Tomorrow will be the 6th week in a row. And so I want to invite you to join. It's super affordable, ridiculously affordable. You can join for as low as $3 a month. At the $5 a month level, we have a Discord server, so a whole community of 100 people in there helping each other out and sharing things and keeping each other up to date and lifted up in prayer and all sorts of things. So yeah, I just want to invite you to join the channel membership, and there will be always be public content, right? And also understand revelation will never sit behind a paywall. What do I mean by that? You'll never see me say, hey, I just had a dream last night. I posted it in the member section. Join now to read my dream or to watch the video about. You'll never see that, okay, on this channel. If God gives me revelation to share, it's always going to be public for free, no paywall whatsoever. There, of course, will be times where I may share something in the member section live stream, but then, I can clip it and share it publicly, right? So yeah, I just want to give y'all that invitation because I haven't really talked about the member section much publicly recently. And so, yeah, a lot of changes going on and just more consistent content. So thank you all for being here for this live stream. Let me check my notes real quick, make sure I didn't miss anything. And if y'all got any questions for me, I guess y'all can go ahead and post them about anything, Yeah, okay, not to mention the member section also supports this ministry, right? That's the biggest thing. I've said from the very beginning, I have many channel members who have been members for over 2 years now. And from the very beginning, I always said I want someone's main reason for joining the member section to support what I'm doing. I don't want it to be, oh, let me pay because I think I'm going to get some type of bonus, or let me pay because I'm going to get more revelation or something like that. I want it to be to support the ministry, to give, right? As scripture instructs us to do for those who minister to us. So like I said, those live streams that I've been doing are thank you for that. All right, y'all. That'll be it. Thank you for being here. And for the channel members, I will see you tomorrow. Be blessed.